Thank you very much, Con, and many congratulations to the Positive Farmers Conference for having got such a turnout again. And 16 years, Con, great achievement. And I know yourself and Mike have been the driving force, so very well done and many congratulations on pulling it together for so long. Ladies and gentlemen, I'm told that I have 100 minutes. I'm told that I'm not allowed to go over those 100 minutes. And yet I have three very, very interesting speakers. So I'm not going to waste a lot of time with long introductions. And we're going to get down to business quite quickly. Other than to say I was at a conference in the UK last week, and I thought the chairman that opened the conference did it quite well, in that he said, he referred to the old Chinese proverb, and he said, the mind is like a parachute. You better hope it's open when you're using it. And I think that's something that the Positive Farmers Conference really does challenge and make us forces us to open our mind and look at new thinking. First up, ladies and gentlemen, is Kevin Lane. Kevin Lane is CEO of the Irish Dairy Board, and as I say, no need for long introductions. I think something that's really important this year as we face into what has all the appearances at this stage, from what we know today, of being a difficult year. Kevin's going to look at milk price and market outlook. Kevin's presentation is going to go on for 20-25 minutes. Then we're going to take questions and answers for Kevin, and then we'll go on to the second part of our presentation, our session this morning, and Mike and John will give their presentation. So Kevin, if I could ask you to...
Ladies and gentlemen, thank you, Justin, for the introduction. And thank you, Michael and Con, for the invitation. This conference has been running for 16 years, and I just want to thank the guys for the timing. The first time they asked me to speak, dairy markets are crashing right around the world. So the timing on this one is really good, guys. So what I'd like to cover for you this morning, if I may, is a brief introduction to the IDB. Who are we and what do we do? I suppose a major journey of change has gone on over the past number of years. I'll try and explain that to you and tell you why we did what we've done. I think number three, there will be a number of you a little bit interested in, which is our best estimate of where the markets are today, but more importantly, where they're going and maybe for how long. And then what I'll try and do in the last section, which will be covered in 20-25 minutes, is give you a view of global markets and where we see them developing in the different countries around the world. So today we're an organisation that has sales well in excess of €2 billion. We export now to over 100 countries right around the world, doing that with a team of 3,500 people in different markets right around the world. And as you know, we've been in business for in excess of 50 years. We are a global business. If you look in at that slide, it'll tell you where all of our different sales and business development teams are based right around the world. We've dialed that up very significantly in the past couple of years, trying to put a lot more feet on the street. And we sell our business, and we market our business, and we market your premium dairy products on the basis of two vehicles. One, through brands, and I think you will all be very well aware of the Kerrygold brand and how well that's doing in international markets. But we also have a very large, about €1 billion ingredients business, where we try to take dairy products and make sure that they're functional or blended in a way that they're adding value inside in B2B opportunities. And they're just a small selection of the different brands that we have on sale in markets right around the world. What you'll see there is some of our products in Germany, some of the powdered products in Africa. We have a lot of new products in the USA, UK, and indeed in the Middle East. So just a small selection of premium branded products that carry the Kerrygold name and that carry your milk products, all selling at a premium to domestic production. And so the business has gone on a fairly significant transformation. We looked in at the business and we tried to clear our mind 4 or 5 years ago about where we were, and more importantly, were we fit for purpose in an expanding Irish milk pool? Were we truly building profitable routes to market? Were we developing new products that the consumer was genuinely looking for? Were we efficient across all our operation sites? And were we delivering the best returns to our members? And frankly, we didn't like the answer to some of those questions. And we recognized some 4 or 5 years ago that we had a big body of work to do if we were to represent you properly in international markets. And so it was fairly clear to us that we had to go through a fairly fundamental change. We knew we needed to act, and we sat with the board, sat with the management team, pulled the people together from the various regions, and we agreed that we were going to build the business for the future across 4 core pillars. Number one, that we were going to be much more efficient, and we were going to install lean manufacturing in every one of our manufacturing locations. Number two, we were going to get a lot more serious about value-added growth. We don't want to sell Irish dairy as a commodity. We were also serious about market expansion and putting those feet on the street in markets right around the world, and I'll touch on each of those later on in the presentation. But that area of focus brought us into the brands, made sure that we were dialing up NPD and innovation, working indeed with our friends in Teagasc on that, and also that we were investing much more significantly in capital expenditure to make ourselves more efficient and to expand. And we've also, as you're aware, dialed up the M&A and the acquisition within the business. So what we set about doing some 3 or 4 years ago now is we wanted to get out of all the non-core dairy assets, or indeed the unprofitable businesses. We wanted to make sure that we got rid of all of the businesses that we didn't see had a long-term future. And what we were able to do is we were able to take the cash that we generated from those sales and those closures and the businesses that were losing money, and we were able to put them into a number of different acquisitions that were in the core dairy arena, and we're going to provide a profitable route to market, or indeed a route to value, as we looked out into an expanding milk pool. We also selected 4 core markets where we weren't doing much business in, but where we were confident there was going to be a lot of growth. We also dialed up innovation, looked at the Kerrygold brand and how we could build that to be a much bigger business, because it is where we get the most of our added value, and we're fortunate we've done a very positive message on that. We got lean manufacturing into all our facilities around the world, and we've, in a very significant way, changed the management structure, brought in a number of very capable boys and girls into all parts of our business at all levels, because at the end of the day, it's the people that will drive the business forward. And so the next piece, I suppose, is the piece that you're all very interested in, and I don't have a crystal ball, but what I will do is give you our very best estimate, as honest as we see it, as we look out into the world markets. Prices tell a story. If you look at what happened back in 2012, you saw the massive increases, particularly through the GDT, which tends to exaggerate prices on the way up and certainly exaggerates prices on the way down. But you see where it has come down right up to this year with a fairly significant reduction in pricing. And it's happened for a number of reasons. If you look at it, you saw the effect of the New Zealand drought at the same time as China stepping up demand. We saw very strong Chinese buying across a 6 to 9 month period. And then we saw some fairly significant changes, very strong weather conditions. But around that time, we also saw, we're going back into May of last year, we saw a fairly significant correction in pricing, with China pulling back very significantly from a very intensive purchasing, and they have built too much stock. We saw a fairly significant drop in pricing when demand corrected. We saw the Russian ban being announced, and all of those events have led us to a very different stage where supply and demand have become very imbalanced. If we look out at what production has been in the past 12 months, we have been having a supply curve of around 5% globally, while demand in that same period, and as we look out, is closer to 2–2.5%. So stocks have been building by about that amount. And I think any commentator, if they're being honest with you, will tell you that we're in for a difficult year in 2015, where you have very high milk output leading to high stocks and a slowing demand that has weakened prices. We see milk output likely to sustain momentum, because it's not a tap you can turn on and turn off. And we also see the April phenomenon, where EU becomes less constrained in able to produce milk, putting more milk into the system. And we see the USA continuing to ramp up supply. The market sentiment is still weak out there. Buyers are not coming in any significant way. They're tactically buying as opposed to buying long term. Suppliers are nervous because of the stock build and the continual drop in stock values. And milk prices do lag product prices. And I think it's fair to say we saw a GDT about a month ago that was in at around 19 to 20 cent a litre. We saw spot markets in EU about 25 cent a litre. But here in Ireland today, processors are still paying around 30 cent a litre. So the actual market phenomenons have not yet been reflected in milk price paid to farmers in Ireland at this point in time. And I think we've been saying consistently for the past number of years that mid to high 30s as an average milk price is not a sustainable long-term price, because that drives excessive supply from areas that shouldn't actually be supplying milk, and it constrains demand growth. And volatility is here to stay. And the big volatile move in the past number of years has been weather, and we've actually had a period of 2 to 3 years where we've had no major weather events right across the world that have constrained supply. So our best estimate at this price, interestingly, we've done this completely independently. We did it back in October when we wrote our budget for 2015, and we came in with an average milk price return based on our product price return. We don't set milk price, we set product price. The processor set the milk price. We estimate that the average for the year will be somewhere between 26 and 27 cents per litre, which is a much more difficult place from where we were in the past couple of years. And how are we trying to manage that volatility, or how are we trying to protect farmers when milk price goes very low? Well, the number one thing we can do is to sell more products in an added value way, and that's through the brands. Number two is doing that through ingredients, and we are able to return significantly higher prices than the GDT or the spot market is at this point in time. And obviously diversifying markets. We were a business that concentrated very exclusively around Germany, the UK and the USA. They were our 3 core markets. We had very good business there, we still have, but we didn't have a big business outside of those. And in the past number of years, we've dialed up in a very significant way new markets outside of those where significant growth is likely to come. Selling forward as well on financial markets, hedging, whether it be with Eurex or others, that is an opportunity for us and for you. And contract management, and I know there was no talk about fixed milk pricing when milk was shooting up, and now everybody is sorry they didn't fix. But I think there is a sensible average price at where a certain percentage of milk price should and could be fixed, and we could get contracts in the market to back that. But let's not get totally doomy and gloomy. We've had a couple of very good years. We're probably heading into one tough year. I don't think it'll be much beyond that. Some of the other speakers have a more negative or more pessimistic view. That's not ours. We think 2015 will be tough, but we think it'll pick back up again, back into 15 and into 16. We've no doubt in our mind that the Chinese buyers will return. They have a massive population that's still growing, and their demand for dairy is going to be there for many years ahead. They're overstocked right now, but that stock will get used up in the system. We also believe the Russian situation will stabilize over time. Russia is the biggest dairy importer in the world, used to be the biggest dairy importer in the world, and they simply cannot supply all of their needs internally from domestic supply. And we think that market in time will open back up again. Marginal costs of milk production, you know it very well in Ireland, operating in the main off a grass-based production system and how efficient that can be. But marginal costs of production around the world are very, very high, much higher than Ireland. And prices cannot remain too low for too long without choking off that supply. And it's quite unusual that we've had such a period of international weather that has had no effect on supply. That's quite unusual. Long-term outlook mainly driven by 4 things. The population growth is looking very significant. There are a number of emerging market economies that we have now targeted in a very significant way with our investment, westernization of diets, and a big focus on nutrition. And so maybe to move on to the final section of the presentation, how are we developing new markets for Irish dairy products, assuming that we do expand by up to the 50% that has been spoken about in Food Harvest 2020. Over the past 3 years, we've invested €200 million in 5 key areas: in the brands, driving brand growth, in product development, in market investment, the M&A agenda. We've acquired 7 companies in the past 4 years, and in CapEx. And I'll briefly touch a slide on each of those. So brand, our business is built on the premiumization of Irish dairy. And the only way we can get a message to consumers that resonate with them is that we do things differently in Ireland because we do it off of a grass base. And to us, that is number one. And we do believe, as we look out long term, that our only comparative advantage against the giants in New Zealand and the States in particular is that we do produce milk in a better way. I'd like to share with you a slide that we advertisements that we run around the world. This particular one is just running now in the United States, and we're investing a number of millions of dollars in getting our message out to much more consumers. But the theme and the message of what this will tell you is exactly the same in Germany and in other markets around the world. It'll only take 1 minute. Thank you.
Why do they eat grass?
Because that's what cows eat.
Hop, hop. Does grass taste good?
Well, I've never tried it. Makes the butter and cheese taste good, though.
Says who?
Says Mother Nature.
Butter and cheese are at their finest when they're made just as nature intended, from the milk of grass-fed cows.
Who talked to Mother Nature?
Kerrygold, delicious because nature said so.
Thank you. And that's an ad campaign we're going to run in the States this year. It starts actually this month, and it's because nature said so. It's shot in County Waterford, and it's focusing very heavily on Irish dairy farmers' grass-fed message, which is about purity, naturalness, quality and taste. And I can tell you that is resonating massively well with all of our consumers, and we've had an unbelievably positive response to educating them about why they should be paying more and why they should give regard to what Irish dairy does. It's a national TV and digital campaign that will run right through 2015, and we're targeting the US consumer who cares and who is worried about where their product comes from. Same in Germany. In Germany, our Kerrygold butter is the #1 branded butter within the whole market of Germany, with over a 50% market share. And we're doing national TV, getting that same message out this year. And it highlights, our respect for nature, tradition, animals. And the German consumer is dialed in very closely and very well educated about where their products come from. In terms of brand growth, I won't go through these, but in Africa, we're now the #1 imported butter in South Africa. We've the top 3 brand position in Malawi, Angola, DRC and Congo, and we've targeted that section very hard. We now have over 250 people with feet on the street working on distributing that products every day. And I mentioned earlier on that we used to do much business outside of here. Last year, we finished with in excess of €100 million of new sales in Africa. China as well, growing quite significantly, even though we are at a disadvantage versus New Zealand with their free trade agreement in that market. New product development, if you look at that, I won't stay long on it. On the bottom shelf, you see all of the added value ingredients products that we're working on, and the top shelf is the consumer. In market expansion, we spend a lot of time and a lot of money on this, and just in the last 18 months alone, there are 36 new people working for Irish Dairy Board, working for you within new markets all around the world. And they're there in local markets, whether it be Riyadh in Saudi Arabia or in Beijing, trying to understand what the consumers are looking for and feeding that back to us in Dublin, where we can develop new products that match that need. And M&A, we haven't been shy. We knew we needed to go out and acquire more routes to market and build new subsidiaries and find companies where our technology and our brands were compatible with. And they're the evaluation criteria that we look at, and we have made 7 acquisitions in the past 4 years, and fortunately to date we haven't screwed up any one of them yet, and hopefully we'll be able to keep that going. Capital expenditure is another area where we've dialed up very significantly. Justin McCarthy and his team were out with us in Wisconsin in June of last year, where we announced the €10 million expansion of our processed cheese ingredient business, a business that's going extremely well. We've also expanded our distribution in the US. We've put another 13 million into Germany because we see continued growth there, not just in butter and spreads, but also in added value dairy products. We've invested 21 million in the UK. We're in the midst of a 16 million euro investment in Riyadh in Saudi Arabia, where we're building a new cheese processing plant, a fresh cheese that will be supplied to consumers within Saudi Arabia and beyond, working with Chagask in developing that technology from Irish powder. And obviously the most recent announcement we made, we'll be investing in excess of 30 million euro in Mitchelstown in County Cork, with the building of a new Kerrygold Centre of Excellence for butter and spreads that will be for the first time manufactured in the island of Ireland in a very efficient way. And so how does our business strategy deliver for our members? Well, number 1, and most importantly, is we have a mandate to pay the best possible product price returns that we can get from the market, and that in turn goes through into milk price back through your cooperatives. 2014 was a record year for us. I hope it's because we're doing a few things right, but we were quite surprised, and it's way over the forecast, but an extra 41,000 tonnes of Irish dairy product found its way in 14 through the Irish Dairy Board. So hopefully that's a signal of the future, which is 16% up on last year. Profitability, we got to keep driving that on, and obviously the members' bonus, we paid €11 million out into the industry last year on the profits we achieved, which was up 12% on the previous year. And so looking to the future, we do see a very difficult year ahead, but the medium to long-term outlook remains very positive. The fundamentals are still in place. We're confident we can continue to pay a leading price as we have done in the past couple of years, and we'll continue and have a mandate to continue to grow our share of the Irish exportable milk pool. And we're trying to build a robust and valuable asset for the Irish dairy industry that delivers strong short-term and sustainable long-term returns. So thank you for your time and attention.
Thank you, Kevin, and thanks for keeping to time. Ladies and gentlemen, we have two roving mics. Where are they? Okay, we're going to get the mics up. Get your hands up for questions, and maybe just, Kevin, if I could use the privilege of chairman to ask the first question. And I didn't think of this question myself, I must say. I was actually asked it. I was doing a presentation last night to Waterford IFA, and this was a question that came up, Kevin, so maybe I'll bat it over to you. And it was, well, what is the potential through premiumisation, through better processing efficiency, to deliver a higher milk price to farmers? If you looked at where the panacea is in terms of the most efficient processing, the most efficient marketing, the most efficient route to markets, if we had that in place, what would it deliver in a milk price to Irish farmers?
I'd prefer you come up with the question yourself, Justin, because that's a very tough one. And it's difficult to give you a very direct answer, but I'll give you an answer as honestly as I can. It's hard to put a cent per litre figure on it, but maybe I'll draw two examples of where I think it makes a very fundamental difference. Premiumisation of our business in selling Irish dairy off of a grass-fed base works particularly well in Germany and the USA. And in Germany today, our products are on shelf, your products are on shelf as Kerrygold butters and spreads at €1.79. And the equivalent price for Marken butter or private label domestic butter is at 85 cent a litre, 85 cent a packet. So we're comparing like with like. So there is a resonance of what premium Irish dairy can and should sell at, but we can only achieve that by having a point of difference in the product, and secondly, by making sure that our marketing messages, as we've shown you, are resonating with consumers. In the States today, Kerrygold cheeses and butters sell approximately $4 a packet, and Dean Foods and Land O'Lakes and local domestic producers of American dairy are selling in between $2 and $2.50. So depending on the market, we're selling somewhere between a 30% and a 50% premium for Irish dairy.
Okay. Could I just ask that the speaker name and occupation? We've one. Maybe if you just stand up as well, and a mic down at the back here as well.
Sorry, Andrew Gow. On?
Yeah.
Yeah. Andrew Gow here, dairy farmer in Limerick. Sorry, you've actually partially answered my question. I was going to ask you actually, what premium do you think the Kerrygold and other brands are getting over the non-branded product that are sold in the market? But also, I just must really commend you on the marketing that has been done over the last number of years. I looked at the recent commercials that were made, and in particular the ads that were made there on the Cleary farm in Waterford, and I can't help thinking that there must be huge tourism potential link up with it, and also with the opening of the beef markets in the US, that all that is complementary. Just a small story, just to tell you very briefly. As some of you might be aware, that we ourselves have done a little bit for Kerrygold in Germany. I received a letter just before Christmas, a handwritten letter from a young lady in Germany, don't know her at all, don't know anything about her, but she'd found our contact somewhere through the network, and she wants to come and spend her summer in Ireland. Just liked what she saw on the ad. So it goes back to the tourism angle, and the whole message is. But just come back to my question again. You maybe you've answered it, but the premium or the buffer that we have with the brands that we have over and above, because I know that the Kerrygold brand is.
So,
is
Kevin,
out.
what is the Kerrygold brand delivering for farmers?
The figures haven't been announced yet, Justin. We'll announce our results in April, but I can safely say that we'll be well in excess of Kerrygold internationally. Will be well in excess of 600 million euro at retail sales value off of last year's sales.
Okay,
So-
Kevin at the back, and then we'll go here.
Kevin Toomey, Dairy Gold Supplier. No, congratulations, Kevin, on your work to date with the Dairy Board. It's been very impressive and great to see it moving
Thank you.
forward. So two quick questions. How do you envisage the fixed price contract coming back to Irish farmers? Will it be directly or through the co-op who supplies that product to that market? And the second question, and it's a bit what happened at the industry in 2008 when excess co-op supply comes onto your doorstep to be sold. How do you envisage extra product over and above contracted to from Irish co-ops? How do you envisage dealing with that?
Thanks, Kevin, and thank you for the compliment. Fixed price, Kevin, we would see in a very simple way. We believe that has to be done with the processors that you're supplying Dairygold in your own instance, and then in turn we can sit with Jim Wolf's guys and work out based on the milk price he has fixed how we can secure contracts in the market of a long-term nature, either through our brands or through our customer contacts, and we can back-to-back that based on doing a 1, 2 or 3 year deal. In terms of extra supply, you know, what I would say to all of the processors is you can't just dump product at our doorstep with no notice, because it takes us time. We're 5 years, Kevin, trying to build new routes to market and trying to add value to what we're at and putting feet on the street all around the world. So if somebody comes to us and dumps an extra 10,000 or 20,000 or 30,000 tonnes onto us without notice, it will be sold as a commodity. And that's not what any of us want. So my message out to the processors, and it's a message we've been given through our monthly board meetings, is please plan correctly what you expected growth output is going to be, how much of that you plan to put through the Irish Dairy Board in cheese, in butter and in powder, and we will build added value routes to market for that if we're given adequate notice.
Kevin, have you seen an increase in the amount of product that the Irish Dairy Board has been asked to trade over the last 12 months?
A massive increase, Justin. It actually caught us by surprise, if we're to be honest, because milk, probably, Michael is probably better able to answer this than me, milk growth in Ireland was probably 5% year on year, and we got 16% extra product.
Is that an endorsement of your efficient route to market, that you're able to compete on and deliver a price back to the co-op?
I hope that's your headline for tomorrow.
Moving on quickly, gentlemen.
Sorry, Sean Keating, dairy farmer. Just a quick query in relation to the Chinese, and I suppose looking at it, it seems that they brought a lot of stock when the price was high. I'm just wondering what the thought process is there in terms of.
Kevin, if you don't mind, I might take 2 questions just to
Yeah,
make sure.
you might just get the first one again from, I didn't get the man's name. And
Sean Keating, sorry.
Sean.
Is the name. The question is in relation to the Chinese. They seem to buy a lot of product when the price was high, and obviously seem to go out to the market now when the price has gone down. So I'm just wondering what your thoughts are on that.
Okay.
Okay, maybe and Tim.
Yeah, Chairman, could I ask Kevin, I suppose a comment first. I think if we ever needed premium brands and premium markets and a premium price, this is the year, Kevin, you'll be measured on, you know.
Yeah.
This is the year we need to get to keep the floor as high as we can. But one thing you didn't cover at all, I noticed in your presentation, was currency fluctuations. And if you're dealing with a lot of product going to the UK and the US, and we're looking at quantitative easing, is there a bit of a chance there that things could improve a bit more than we expect?
Okay.
You're not that famous yet. Tim O'Leary, Deputy President of the Irish IFA. I did say yet, Tim. Kevin, I'll let you answer those 2 questions.
Okay.
Ladies and gentlemen, raise your hands now and we'll try and get the mics out so there's no wasted time. Go ahead, Kevin.
Yeah, firstly to Sean, Chinese pricing. Yeah, it's quite an issue for them, and if you know the Chinese market, their problems tend to become other people's problems. They have procured an awful lot, in particular of whole milk powder, and they procured it at prices somewhere between $4,500 and $5,000 a tonne. And GDT auction in the last number of months, where they have been buying a lot of product, has been somewhere between $2,000 and $2,500. So they are having to find a way of getting that used up in the system, or indeed in some instances trying to get out of those contracts. And we haven't yet seen the effect of that, other than somewhere along the supply chain there's going to be a bat taken by somebody if the prices aren't honoured or the volume isn't drawn off. And I think it's partly why they have completely withdrawn from the market, is that they have a lot of high price stock and they have too much stock. And until that washes through the system, I don't see them buying again. But for them, with the volumes they buy, prices at $2,500 to $3,000 a tonne are very, very attractive for their market, and much better than they can produce domestically. On Tim O'Leary's challenging question, we would have expected nothing else, Tim. Currency fluctuations and premiumisation. Yeah, look, Tim, if we were sitting here 5 years ago, I'm not sure we would be able to say with a degree of confidence that we will be able to walk the walk in 2015 and that our brands and our products will deliver. But we are at the end of a 4 to 5 year journey where we've been building. And it is the year where we'll be judged every year, but it is the year where I'm very confident that the brands and the routes to market will stand up and be counted. And we will get a premium for the work we've been doing on the back of the advertisement campaigns that we've been running and getting the message out to consumers. And on your second part of your question on currency, you're right, that's a positive windfall for us. The euro has moved. When we did the budget, we were thinking of a euro dollar of around the 130. We saw conversion rates yesterday of close to 118. And so that is a significant advantage for us, both in converting our profits back in dollars, but also in being more competitive in those markets if there has been a 10% reduction. So we would certainly be looking to capitalise on any currency benefits that are there in the current year, as long as they might last.
Just how much of that falls to the bottom line? Or do your purchasers kind of factor that in when they're saying you're getting a windfall here?
Sure.
Can you bank on 10%?
No.
Maybe, Kevin, just if you could allude to the question in case people didn't hear at the back.
Yeah, Tim's question is, how much of that 10% currency move can we take to the bottom line, or can we return back to Irish farmers? And the bottom line is, it's a lag. You can return it all the first time you do the trade as your currency converts. And then as buyers get smarter to know that there has been a market correction and you have a benefit on currency, they'll want to share in that. But it'll start off at a premium, Tim, at the very start, and you'll get the full benefit in the conversion of your profits and in those very first sales as currency has moved, but it hasn't been backed against product.
Kevin, if I'm correct, you're forecasting sales to hit 250 million, I think, is it by 2018 in the US market? Sorry, just in the context of TTIP and world trade negotiations, like, I think everybody looks at America as a very open market. The Irish Dairy Board face significant challenges actually in the US market as well. And are you going to campaign, or are you going to push hard for, in any TTIP negotiation, for those to be relaxed?
You bet. It's a very, very big windfall for Irish dairy farmers if TTIP equalises the supply. We are paying, Justin, we're paying $1,000 a tonne penalties or import duties based on the quota for butter and cheese. And if they were removed, that's an awful lot of money that we could be investing in the brands or driving our business. So we would be a big advocate of markets equalising on the dairy side, because now that we have an infrastructure in place, we think we could capitalise massively on that. Not all of it would come back to the bottom line. We'd invest probably half of it in growing the business much more. In terms of your first question, we have targets set as part of our 5-year plan. We've done a 5-year plan, which we're taking our board through in the next month or two, but they're aware of this figure, is that we have targeted our consumer branded business in the USA, the Kerrygold in the main, to hit $250 million by 2019. And we have an ingredients business in the USA, most of which has been acquired, has sales today of about $130 million. They have signed off on a 5-year plan for that business as well, to hit another $250,000 on that side. Some of that might have to come through acquisition, but a lot of it will be organic growth, and we've invested in the factory for that. So Justin, at the end of 2019, we would hope to have a $500 million business in the United States across our 2 core platforms.
Con?
John Kingston, Dairy Gold supplier. firstly, I must compliment Kevin and the team and the inroads they're making on marketing. But my question is related to a conversation lately with overseas IDB employee working in marketing in an emerging market. And he said he's been very frustrated with supply and continuity of supply from co-ops. And like our co-ops and processors coming up to the mark with regards marketing in emerging overseas countries, and the employee saw it as a big problem where they work hard to get a product on the shelf, and all of a sudden the product runs out, and are co-ops doing enough to keep the supply?
Yeah, thanks, John. It's a very good question. I suppose there's a constant tension, a constant battle between ourselves and some of the cooperatives to make sure that they are walking the walk, and that when we do deals in international markets around sustainable supply, that they don't let us down. And there is times when their heads get turned with shorter term spot opportunities, which is no good for building a long-term business. So it's a constant battle. There are some guys out there quite frustrated that they wouldn't be able to get it. But to be fair to the processors, and we have to have both sides of the debate, the ones that we have worked with and put in front of them a long-term plan, Dairygold being a very good example, we have in turn got a long-term commitment on supply from them also. So it's about us and them working together from the market back. It has got an awful lot better, but it's still not perfect.
Okay, ladies and gentlemen, I see nobody jumping up and down to ask another question. Kevin's going to stay on the top table, so he'll be available in the second session to also ask or to answer any questions that come to